If nothing else, remember this. In compliance, what saves you isn't being perfect, is being able to show that you had the right processes, that you followed it, and improved when things went wrong. Imagine you're running a fast-growing startup. You're adding thousands of customers a day, investors love you, customers rave about your product, you hit unicorn status, and everything looks perfect. Then the regulator walks in and says, your systems are weak. This is what happens when the pressure to scale fast leads to taking the wrong shortcuts, and building products become more important than building trust. And that's the key lesson here. Before you scale, you need to make sure that your systems can scale too. Let's get into it. I'm Kevin. I've been in risk and compliance for over 15 years, from head of audit in banking in New York to chief risk and compliance officer at a fintech in Europe. Whether you're an established bank, a challenger bank, a neobank, or even a crypto exchange or payment startup, here's how to keep your name off of the regulator's front page. So first, build your AML framework early and scale it with the business. Don't assume that what worked with 1,000 users will work with 10 million users. Lay the foundations right so that when you do scale, you don't have to reinvent the wheel every time you hit a significant milestone. You can just add an additional layer to what's already working. Map your AML framework, such as who does what systems do you use, what gets reviewed, when does it get reviewed, and things of that nature. While also gather all the information you can to align your framework with new developments and best practices. So one of the best advices that I could give you is to regularly review reports that your regulator files. There you can find AML trends and what other banks or fintechs are experiencing, and you can use that to update your own AML framework. Because at the end of the day, your entire AML program depends on the first decision. Who are we letting in and how risky are they? If you get that wrong, then everything that comes after is built on a shaky foundation. And if you're ever unsure about something, don't hesitate to have a conversation with your regulators. They're usually there to support you, not to catch you out. Also, document everything. Document the process and enforce it. So if your risk assessment policy only exists in theory or as a PowerPoint in someone's SharePoint folder, that won't save you. Create a clear playbook. What information is always required and what considers a red flag. Tie the policy to your onboarding system logic. When regulators knock, your documentation is the first thing that they'll look at. If they're happy there, chances are that they'll be happy later as well. Test your controls regularly, so don't wait for a regulator to tell you your system is broken. Audit your onboarding flows and conduct regular manager or peer reviews. Just because your checklist exists doesn't mean it's being followed. Audit it, test it, and update it as your customer base evolves. Run simulations, do internal audits, challenge your own teams, and use your learnings, new developments, and best practices to improve what you're doing regularly. Look to regulation earlier rather than later. So if product can push out a new feature overnight, but compliance needs 3 weeks to review it, something's off. Include compliance or regulatory experts early. The regulation is usually right there. There's no need to have that to be the last point at the checkoff. And the fifth will be train everyone. Not just your compliance team, but engineers, product managers, and even marketing should understand basic AML risks. At the end of the day, AML compliance is not just about checking boxes, it's about protecting your company from being used to commit financial crime. If nothing else, remember this. In compliance, what saves you isn't being perfect, is being able to show that you had the right processes, that you followed it, and improved when things went wrong. If you got value from this breakdown, give it a like and share it with someone in risk or fintech or banking. And let me know in the comments if there's any other case you would want me to cover as well. When a customer signs up for a bank account, one of the most important and legally required steps is conducting a risk assessment. I'm Kevin. Thanks.